I would like to share with you some of my views about the global economy and the markets, and of course there'll be some interesting implication for what's happening also in global real estate markets. My personal view is the risk of a global recession and the risk of another global financial crisis over at least the next year or two is still a very low probability. Things could go wrong, but I would say a global recession or global financial crisis would not be my baseline scenario unless something radical happens, and we can discuss where those radical tail risk could or could not materialize. While there have been a bunch of episodes of tail risk and volatility, even the latest one, Brexit, from a financial market point of view, has been a non-event. This was a shock, was not a crisis, was not a Lehman moment, was a regional shock, was not a global shock. It affected UK and European markets, not global markets, and it's been a temporary shock. It lasted about a week. Now, if you think about this political risk, of course, in the very short term, the issue of whether Donald Trump is going to win the US presidency, and if he's elected, whether he's going to moderate to the center or whether his policies will be as radical as he pronounced them in some of his speeches. It looks less likely that he may be elected, and that might be one of the reasons why markets are discounting this particular risk. After the bubble in commodities, now there's been a bust in commodity prices and oil prices and energy, and therefore slacking goods labor market and commodity implies that in spite of printing money, you're barely able to achieve positive inflation. That's another kind of puzzle abnormality in the global economy.